first react over the China news or potential news of a potential deal? I know your company is really a domestic company. If there is a deal with China when they meet at the G20, does that help your business or hurt your business, Bill?
It'll help our business, but not directly. Indirectly, if it can bring some consistency to cost of the raw materials in basic buildings, rebar, steel, things of that nature, and we get more consistency in commodity pricing, it'll help stabilize the overall outlook.
Well, let's talk about something that might affect your business more, and that's possible infrastructure building, something the president has said repeatedly he wants to do. We just got jobs numbers out, as you know, and jobs have been growing consistently for 97 months. The construction jobs, 30,000 last month, which is toward the top of the range over the last 12 months or so. What would be the prospects if we really did get infrastructure, meaningful infrastructure investment? How would these numbers change in terms of employment in the construction business?
Well, I think they're going to continue to increase. I mean, we have difficulty finding qualified workers right now. It's one of our highest priorities, hiring qualified truck drivers. There's going to be additional demands on labor, probably some more labor inflation. Hopefully the participation rate will increase. I know it increased in this job report. There still are a lot of able-bodied Americans sitting at home for various reasons, and I hope that participation rate will help alleviate some of the shortages that we do have. But it'll take probably some more wage inflation to bring them from home into the workforce.
Constance?
Yeah, so that's a great point about needing a higher, what we would call reservation wage, so higher wages to bring them back into the workforce. So when you see these shortages, are you willing to pay workers more?
Well, it's an excellent question. We have to pay workers more in this environment. Plus, we have to put a lot more internal resources into hiring and sourcing people. Last year alone, through turnover and increases in our business, we added over 300 truck driver positions and 500 total jobs just to maintain our current level of business, and we're growing. So it's very difficult, and we have to put a lot of internal resources on it, as well as increasing wages.
Right. And are you seeing your productivity improve alongside of this, or are you seeing your productivity stay about the same?
No, that's a very interesting question, too. We're driving productivity through innovation and through technology, through new tools and GPS and truck tracking, for instance, optimization of our truck fleet to deliver concrete more efficiently, more cheaper, and to ultimately rise our yards delivered per man hour. That's the ultimate measure of efficiency for us, but we are using technology to enhance that.
That's great to hear.
So, Bill, are you able to pass on those costs?
Well, that's a very interesting point. We do have to pass on the costs. Not only do we have rising labor, we have rising raw material costs, cement and aggregates, and fuel this year. Our fuel prices in diesel are up 30%. We have automatic mechanisms in a lot of our markets to pass on fuel directly. The others, it's a competitive market, and then we have to make choices into which jobs we take. We choose to compete on the higher-end projects that only a few competitors can do. Projects like the LaGuardia Airport, World Trade Center, Oakland Bay Bridge, where there's a little bit less competition because there's not as many concrete companies, frankly, that can perform that type of work. But yes, we do have to pass along all those inflationary measures that are underlying our costs of production.
Bill, what you're describing is a pretty robust business that is growing and that you're sort of up toward the limits of your capacity, whether it's in the inputs or whether it's the wages or whatever. Do you really need the federal government to come in and layer over that a big new investment in infrastructure? Because there's a lot of infrastructure being invested in, as you pointed out, like LaGuardia, places like that already.
Right. Well, 29 states since 2013 have increased their gas taxes to fund the underspend from the federal government. As you know, 2 years ago, both the Democrats and Republican platforms included a $1 trillion infrastructure bill. Priorities have changed with the administration to some extent. I'm hopeful that in 2019 we'll see a meaningful bill. But you just have to drive. I don't care what city you're in. Congestion, poor roads, poor airports, bridges that are in trouble. The Society of American Engineers rated our infrastructure as a D+. Now, as far as needing a stimulus to help our economy or to help our business specifically, only 18% of our revenues come from transportation and infrastructure projects. What's really much more meaningful to us is a robust GDP on the tune of 3%. Tax reform has added to consumer optimism. Consumers consumer sentiment is at the best it's been in 18 years. So it would be a tailwind to us. But we have a really, really robust economy as we stand right now. But the needs for infrastructure remain and continue to get greater.
So, Constance, from where you sit, do we want an infrastructure package from the federal government? Is that going to be a good or bad thing in this environment?
Well, I think that an infrastructure package is a long-term consideration, right? So even though it may be inflationary in the near term in this environment, it would ultimately be beneficial for the economy. There are many, many areas where our infrastructure lags, and this D+ rating from the American Society of Engineers has been in place for a long time. We've had very low ratings, and we could certainly use an upgrade of our infrastructure investment.
Bill, what if that infrastructure investment comes at the cost of higher interest rates? Because there's no such thing as a free lunch. We're already borrowing a lot of money in this country. If we borrow a lot more money for infrastructure, what does that do to your business in terms of interest rates?
Well, it's very interesting. As far as borrowing money for it, I hope there's more of a user fee funding mechanism. That's the big problem between the Democratic platform and the Republican platform. The proof is in how do you pay for it. The Chamber of Commerce and the administration, to some extent, is coming out in support of a 25-cent gas tax increase phased in over a 5-year period, where users actually have to pay, so all the money does not have to be borrowed.